Empires do not collapse when they are weak, they collapse when they are expensive. At the height of its power, an empire appears unchallengeable. Its dominance becomes normalized. Its systems feel permanent. Its role in the economy shifts from optional to assumed. That is the precise moment when resistance begins to form. In the first chapter of this series, we examined how Nvidia transformed itself from a chip maker into an infrastructure empire, embedding artificial intelligence compute so deeply into the global economy that progress itself began passing through a toll gate. This chapter is not about Nvidia's rise. It is about what happens after dominance becomes unavoidable. Because when a single choke point begins taxing the future, every dependent actor eventually asks the same question. How long can we afford this? The rebellion against Nvidia's AI choke point is not ideological. It is not emotional. It is not even public. It is financial. It begins inside capital expenditure spreadsheets, procurement meetings, and internal architecture reviews. It appears as line items labeled risk mitigation, cost optimization, and long-term optionality. But beneath those words lies something more dangerous: strategic refusal. The first fracture point appears among Nvidia's most important customers, the hyperscalers. These companies are not traditional buyers. They are infrastructure operators themselves. Their business models are built on scale, margin compression, and long-term cost control. Artificial intelligence breaks that model. Every generation of AI increases training costs exponentially. Compute requirements do not scale linearly. They compound. Models grow larger. Datasets expand. Iteration cycles shorten. And every improvement demands more hardware, more power, and more capital. This creates a structural conflict. Nvidia's business model depends on selling increasingly expensive, increasingly specialized compute. Hyperscalers' business models depend on driving unit costs down over time. Those two objectives cannot coexist indefinitely. For years, this conflict was masked by growth. AI revenues expanded fast enough to absorb the cost. Investors rewarded scale over efficiency. Capital was abundant. Margins could be deferred. That era is ending. As AI workloads mature, they shift from experimentation to production. Production workloads are unforgiving. They expose inefficiencies. They punish dependency. Suddenly, the AI tax is no longer theoretical. It shows up in gross margins. This is why the most serious challenge to Nvidia is not coming from a rival semiconductor firm. It is coming from its customers. Inside every major cloud provider, internal silicon initiatives have moved from curiosity to necessity. Custom accelerators are no longer experimental side projects. They are now core strategic assets. But this is where most analysts misunderstand the threat. These chips are not designed to beat Nvidia on performance. They are designed to break the toll system. The goal is not dominance, the goal is escape. By controlling even a portion of their AI workloads internally, hyperscalers reduce exposure. They regain bargaining power. They weaken the assumption that Nvidia is unavoidable. This is the first stage of imperial decay, not competition, normalization. History shows this pattern clearly. When railroads controlled transport, manufacturers built alternative routes. When oil majors controlled energy, nations invested in diversification. When telecommunications giants dictated access, parallel networks emerged. No empire is challenged head-on at first. It is bypassed. Nvidia's greatest strength, its centrality, is also its greatest vulnerability. The more indispensable it becomes, the more incentive exists to root around it. This logic extends beyond corporations. The second fracture point is national. Artificial intelligence is no longer treated as a commercial technology. It is now classified as strategic infrastructure. Compute capacity is being folded into national security doctrine alongside energy, food supply, and defense manufacturing. This changes the rules entirely. Nations do not tolerate permanent dependency on foreign choke points. They tolerate inefficiency far more readily than vulnerability. This is why governments around the world are pouring unprecedented capital into domestic semiconductor fabrication, sovereign AI clusters, and national compute initiatives, even when they are economically suboptimal in the short term. Efficiency is not the objective. Control is. Export controls were the opening move. Industrial policy followed. Subsidies escalated. Domestic capacity became a political mandate. What looks like economic nationalism is, in reality, imperial resistance. Nvidia's dominance depends on a globally integrated supply chain and standardized software ecosystem. Nation-states are deliberately fragmenting both, not to destroy Nvidia outright, but to ensure no single corporation can dictate the terms of intelligence. This is where empires miscalculate. They assume rational economics will override political necessity. It never does. The third fracture point is subtler and more dangerous. It lies in software. CUDA was Nvidia's greatest weapon. It standardized accelerated computing. It locked developers into a single ecosystem. It created gravity that competitors could not escape. But standardization has a hidden weakness. It only works when participation is universal. As alternative hardware proliferates, custom chips, national accelerators, domain-specific processors, the software layer begins to fragment. Abstractions multiply. Optimization becomes local rather than global. At first, this looks inefficient. Then it becomes inevitable. Once enough workloads no longer require CUDA, its gravitational pull weakens. The ecosystem stops converging. It begins diverging. This does not happen in a single moment. It happens gradually, quietly, invisibly, until the empire realizes that the roads it controlled no longer carry all the traffic. This is how choke points die. Not through collapse, through bypass. The final fracture point emerging now is financial. Nvidia's valuation is not built on present earnings. It is built on the assumption of sustained scarcity. Scarcity justifies margins. Margins justify multiples. Multiples justify capital flows. But scarcity is not permanent. It is manufactured, and manufacturing can expand. As fabrication capacity increases globally, as alternative architectures mature, and as optimization improves, the justification for extraordinary pricing power erodes. This does not mean demand disappears. It means leverage weakens. Empires can survive competition. They cannot survive normalization. The moment Nvidia becomes one of several acceptable options rather than the default choice, its imperial economics begin to decay, not catastrophically, incrementally. Slow enough to deny, fast enough to matter. This is where the story stands today. Nvidia remains dominant. Its revenues remain immense. Its hardware remains essential. But the future is no longer unquestioned. Every hyperscaler designing internal silicon is a hedge against permanence. Every nation funding sovereign compute is a rejection of dependency. Every fragmented workload is a small act of resistance. Empires do not fall all at once. They dissolve. When empires begin to fracture, the first signal is not falling revenue. It is falling leverage. The most dangerous phase for a dominant system is not when competitors grow stronger, but when dependents gain options. That is the phase Nvidia is entering now. The mechanics of imperial decay do not show up in headlines. They appear in procurement behavior, contract renegotiations, and subtle shifts in capital allocation. The first mechanical breakdown begins with margins. Nvidia's extraordinary profitability is not accidental. It is the mathematical outcome of scarcity combined with inelastic demand. When customers cannot substitute away, price becomes secondary to access. But this condition only holds while scarcity is unquestioned. The moment buyers believe alternatives will exist, even imperfect ones, pricing power begins to erode. Not immediately, not dramatically, but structurally. This is the distinction most investors miss. They look for collapse. Empires decay through normalization. In the early stages, revenue continues to grow. Volumes increase. Demand remains strong, but margins stop expanding. Then they plateau. Then they compress, not because the product is worse, but because the system is no longer absolute. The AI compute market is now entering that phase. Hyperscalers are no longer optimizing purely for performance. They are optimizing for control. They are willing to accept lower efficiency in exchange for reduced dependency. This is why internal accelerators matter even when they underperform. They are not replacements. They are bargaining chips. Once Nvidia's customers can credibly threaten to route workloads elsewhere, negotiations change, long-term contracts become more complex, discounts appear, bundling increases, strategic concessions multiply. This is not visible to retail investors, but it is unmistakable inside enterprise procurement. The second mechanical breakdown occurs in capital expenditure cycles. For years, AI spending was treated as open-ended. The logic was simple. Intelligence compounds, and being behind is existential. Budgets expanded accordingly. That logic is now being questioned. As AI moves from experimentation to deployment, returns become measurable. Not all workloads justify frontier-level compute. Not every inference task requires maximum performance. This creates stratification. High-end training remains compute-intensive, but inference, fine-tuning, and specialized workloads increasingly migrate to cheaper, more efficient hardware. This is where fragmentation accelerates. Once workloads diversify, no single architecture dominates the entire stack. Optimization becomes contextual. The ecosystem stops converging. This is fatal to choke points, because choke points rely on uniformity. The third breakdown is temporal. Nvidia's advantage is not just technical, it is time-based. Years of software investment, developer mindshare, and ecosystem lock-in created an enormous lead. But time cuts both ways. The longer Nvidia dominates, the more incentive exists for others to close the gap. The longer alternatives are pursued, the more credible they become. This is why empires often fall long after their peak power. The seeds of decline are planted at the height of dominance. The fourth breakdown is geopolitical. Artificial intelligence has become inseparable from national strategy. Governments now view compute capacity as a sovereign asset. This reframes the market. When nations intervene, efficiency stops being the governing principle. Redundancy becomes desirable. Independence becomes mandatory. This is why global semiconductor capacity is expanding in parallel rather than consolidating. From a purely economic perspective, this is inefficient. From a geopolitical perspective, it is inevitable. Nvidia benefits enormously from global standardization. Nation-states benefit from fragmentation. These incentives are fundamentally opposed. As national AI stacks emerge, each optimized for local priorities, the global ecosystem becomes less unified. Software standards diverge. Hardware compatibility weakens. Cross-border dependence declines. This does not eliminate Nvidia's relevance, it limits its reach. The fifth breakdown is psychological. Empires depend on belief. Belief that the system is inevitable. Belief that resistance is futile. Belief that alternatives are inferior by default. Once that belief erodes, behavior changes. Developers begin experimenting elsewhere. Enterprises accept short-term inefficiencies. Governments tolerate higher costs. The spell breaks. This is the most dangerous phase for a dominant power because it is invisible on financial statements. By the time the numbers reflect reality, the structure has already shifted. This is where Nvidia stands today, still dominant, still essential, but no longer unquestioned. The rebellion against the AI tax is not coordinated. It does not require agreement. It only requires alignment of incentives, and those incentives are now aligned. The moment Nvidia becomes one of several acceptable options rather than the default choice, its imperial economics begin to decay. Not catastrophically, incrementally, slow enough to deny, fast enough to matter. This is where the story stands today. Nvidia remains dominant, its revenues remain immense, its hardware remains essential, but the future is no longer unquestioned. Every hyperscaler designing internal silicon is a hedge against permanence. Every nation funding sovereign compute is a rejection of dependency. Every fragmented workload is a small act of resistance. Empires do not fall all at once. They dissolve. Empires do not disappear when they lose dominance. They disappear when they lose inevitability. The final phase of imperial decay is not defined by failure but by adaptation, or the lack of it. This is where the story of Nvidia will ultimately be decided. There are only three paths available to any chokepoint empire once resistance becomes structural. The first path is repression. This is the instinctive response. Tighten control, reinforce lock-in, raise switching costs, expand proprietary layers, push customers deeper into the ecosystem. In the short term, this works. Repression delays fragmentation. It preserves margins. It maintains dominance. But it comes at a cost. Every additional layer of control increases incentive to escape. The more Nvidia hardens its ecosystem, the more hyperscalers and governments invest in alternatives. What looks like defense accelerates rebellion. This is the Roman response. Fortify the borders, tax the provinces harder, demand loyalty. History is clear on how that ends. The second path is accommodation. Accommodation accepts that dominance will soften. It trades margin for longevity. It allows alternatives to coexist while maintaining relevance at the core. This is the more difficult path. Accommodation requires abandoning the fantasy of permanence. It requires accepting that the future will be multipolar. It requires optimizing for participation rather than control. For Nvidia, this would mean embracing heterogeneous compute environments, loosening software exclusivity, and positioning itself as the premium option within a broader ecosystem rather than the gatekeeper of the entire system. This path preserves influence, but it sacrifices imperial economics. The third path is reinvention. Reinvention does not attempt to preserve the choke point. It moves beyond it. It identifies the next bottleneck before resistance fully matures. Empires that survive longest are not those that defend their gates, but those that abandon them early and build new ones elsewhere. This is the most dangerous path. It requires self-disruption. It requires undermining the very mechanisms that made the empire powerful. But it is also the only path that creates a second act. Which path Nvidia chooses is not yet clear. What is clear is that the conditions that created its dominance will not persist indefinitely. Scarcity will not remain absolute. Standardization will not remain universal. Dependence will not remain tolerated. This does not mean Nvidia's revenues collapse. It means its role changes. The market mistake will be assuming this transition looks dramatic. It will not. There will be no single quarter where everything breaks. No earnings call where dominance evaporates. No headline announcing the end of the AI tax. Instead, there will be a series of small adjustments. Margins stabilize. Growth slows. Competition normalizes. Alternatives mature. Pricing power softens. Each change will be defensible in isolation. Together, they redefine the empire. This is how all great choke points end. Not with fire, with diffusion. The most important lesson in this story is not about Nvidia specifically. It is about power and complex systems. Power flows to choke points because they reduce complexity, they simplify choice, they create efficiency, but complexity always returns. As systems grow, specialization increases. As specialization increases, uniformity breaks. As uniformity breaks, choke points weaken. This is not failure, it is entropy. Artificial intelligence is moving from a frontier technology to a general purpose infrastructure. That transition demands diversity, redundancy, and adaptability. A single gate cannot serve a complex world forever. The AI tax is real. It is live, and it has shaped the last phase of technological acceleration. But every tax creates avoidance. Every toll creates alternate routes. Every empire creates the conditions for its own dilution. Nvidia's future will not be decided by whether it remains powerful. It will be decided by whether it recognizes that power must evolve, because the final truth of empire is this: what made you inevitable yesterday is rarely what keeps you relevant tomorrow. The rebellion against the AI choke point is not coming. It is already underway, quietly, rationally, inevitably. And the next phase of the AI era will be defined not by who controls the gate, but by who learns to operate without one. Still dominant, still essential, but no longer unquestioned. The rebellion against the AI tax is not coordinated. It does not require agreement. It only requires alignment of incentives, and those incentives are now aligned. The moment Nvidia becomes one of several acceptable options rather than the default choice, its imperial economics begin to decay. Not catastrophically, incrementally, slow enough to deny, fast enough to matter. This is where the story stands today. Nvidia remains dominant, its revenues remain immense, its hardware remains essential, but the future is no longer unquestioned. Every hyperscaler designing internal silicon is a hedge against permanence. Every nation funding sovereign compute is a rejection of dependency. Every fragmented workload is a small act of resistance. Empires do not fall all at once, they dissolve.